Hello everybody. So today kind of a different video. Again, I've been busy this weekend and I want to talk about a few things, three topics really. Apple, Palantir and Tesla. Apple, let me talk about Apple. This is the first time talking about Apple on this channel and understandably, because predicted growth over the next 12 months is predicted to be 2%. But I do want to say something about Apple Vision. I want to say that everybody's laughing at it, at least at the beginning, but it seems to me, if you follow social media, it seems to me like social media is laughing less and less at the product. And I am not laughing either at the product because, in fact, I tried the product today. I went to an Apple store. I tried it. I did a 30-minute walkthrough and demo. And I must say that I am really impressed. It is, in my view, it is leaps and bounds ahead of what Facebook Meta Quest is doing, and it's leaps and bounds ahead of any of these headsets that I ever tried. I just want to point out this is the first time that I experienced one of these Apple headsets. Well, it's the first Apple headset, but one of these Vision headsets without any dizziness of any sort. And some of the stuff in there is really 0 to 1 in my view. There's a few 0 to 1 products, and the point that I'm making about Apple Vision is that this could reignite the growth because once you try it, and I've tried it for 30 minutes, you miss it once you remove it. It's pretty darn impressive. The last video, if you do the trial of them, is say buy the seat money cannot buy, and oftentimes people say, oh well, we're gonna be able to like watch experiences in virtual reality, like watching a basketball game courtside, as they say, or things like that. And yeah, if you have a lot of money, you can purchase that. But in that machine, you can actually purchase experiences that no money can buy. Like you can look at a sports game from an entirely different angle where you can be in the middle of the field and look at the game as if you were there. You can go meet lions and go with lions in a lion's cage and see nature. I mean, it changes the nature of documentary. It changes the nature of experiencing anything, like an experience. It changes it all. It changes this concept of a movie. The concept of a movie even disappears with that thing. And, I called your attention to 3D memories. If you go do the trial at Apple, that's what they'll have you do. They'll have you do 3D memories, and they'll place you in a scene, in a birthday scene, and there's a child and the parents, and you're in that scene, and you're like in the middle of the room reliving the moment. Is this the future of movies? Is the future of movies you simply being in the room with one of these devices and actually living through the movie? It's kind of surreal. And you can of course replicate, and they try this. You've seen this in the demos. You can have a movie theater like experience. It's just like a movie theater. It's pretty darn impressive. The pass through is stunning, and we've seen many people driving their cars with it, which you're not supposed to do, right? It's illegal. You can't drive your car with that on. But we've seen many people driving their cars, and this is not surprising to me because it is really stunning, the level of pass through. It's also the first one that I see with like a real solution for prescription. So I'm very, very impressed by this product. And of course, this version has a few bugs, and there's a few things that are not perfect. Like, for example, when you look at your hands through the screen, you can clearly see it's not your hands. It's recreated in the headset. But to me, it's not about this version. To me, it's about the next gen. It's about the next gen, and to Apple too, I think. It's about, if this VR, AR is going to be the thing, did this just unlock another 10 years of growth for them? And in my view, it did. The experience is stunning. I'm not sure if this is exactly an iPhone moment because everybody's making fun of them. But if you remember the early days of the iPhone, everybody was making fun of the iPhone. You had commercials with Blackberries shooting at apples, and yet Blackberry was popular when the iPhone came out, if you remember that. Well, this is kind of the same thing, except everybody's against this. But I'm telling you, if you try it, I think it will change your opinion. I've tried it. I was thoroughly impressed. This is the first true innovation since Steve Jobs has been gone, like the first true innovation from Apple, and social media doesn't lie. If social media doesn't like something, it will let you know it doesn't like something. Social media likes this. I see a lot of more and more things coming out on this thing. This could be a very interesting catalyst for the stock. Now, I think why this is so important to talk about this is because, of course, I don't own Apple. It doesn't grow enough. But I do own the triple Q, right? The NASDAQ. And quite a bit of NASDAQ. It's what I call my savings account alternative. And I've always been wary about owning the triple Q because of the prominent size that Apple has in the triple Q. At least it used to have a bigger impact. Now it's about the same size as Microsoft. This reassures me greatly in owning the triple Q, knowing that you have 9-ish% of the triple Q, right, the NASDAQ, 9-ish%, who is invested in something that may not be as stagnant as we think, because I think this is going to be a hit, and it's just an intuition. I may be wrong, but I think this is going to be a hit. And people are very, very quick to dismiss this product. Definitely when you try it, I think it's pretty darn stunning. Anyways, moving on to Palantir. So I own Palantir. I'm very happy about Palantir being up 17% in after hours. It was actually up even more earlier. You know that I haven't been covering much on Palantir lately because, of course, everybody covers Palantir on YouTube. Everybody covers it. What I can tell you about Palantir is that back in August, when the stock reached certain highs, I sold half. I sold half of my Palantir position, put it in other stocks that were good deals in my view at the time, and that was a really nice thing because I was buying the stock of Palantir fairly early, and I got a bunch of Palantir around $8, so I was very happy about doubling my money. Took money off the table, so now my position in Palantir is purely what one would call house money, right? So what I'm doing with Palantir is I'm just letting it run. I'm not touching it. I'm forgetting about it. This is a stock that I'm forgetting about. I'm glad I own it. I'm forgetting about it. If it goes to zero, I don't care because I got my money back. If it does a 10x, well, I'll look at the stock in 10 years and be happy it did a 10x. This stock is kind of a wild card at this point. I used to be very bullish on the stock for the military growth and the military application. And it seems when you look at the revenue growth of this company, it seems like commercial's back and commercial is growing quite a bit. And if you look at the overall growth, they got it for $2.66 billion in revenue in 24, up from trailing 12 months today at $2.22 billion. So the guide is plus 20% of revenue growth. But if you look at this, look at how expensive this stock is in my spreadsheet. It's a 1 in my spreadsheet. It is an expensive stock. And the question is, do we believe that growth, they guided for 20% next 12 months. Do we believe that's going to increase? If you remember Palantir, this was a stock that I entered when Alex Karp was guiding 30% growth for the next 10 years. It's a significant difference to go from 30% growth over the next 10 years to 20% growth over the next 10 years. Significant difference. And if you look at my metric, of course, my metric is very generous with growth. So it's actually the cheapest out of all of the three stocks I'm covering today in my metric. But if you look at the rule of 40, I mean it's a rule of 23. So it's not even a rule of 40. So that's not very appealing from that standpoint. And the growth, even though it's good growth at 20%, it is below my threshold of 30%, and it is below what was guided when the stock went public. So that's also disappointing. Gross margin is outstanding. Gross margin is is the best. I mean, gross margin is great. I mean, this is a highly profitable business. Palantir is one of these companies that you have to judge through qualitative assessment. And I will tell you the same thing about Tesla in a second. Tesla also needs to be mostly judged through qualitative assessments. The numbers, I think, do not do justice to Palantir. If you listen to the call, which I've started listening to, it is clear that this stock is riding an AI demand wave. And a lot of people are getting very excited. And as Alex Karp said, the AIP demand is through the roof. This is very similar to what we've heard from Jensen Huang and what he's been saying about the GPUs. So could this stock go higher? You bet. Am I adding? No. I think it's expensive. I'm not adding. But am I selling? Neither. This stock will be either 10x or go to zero, and I doubt it's not going to go to zero. I don't no investment advice, no financial advice, but it's a solid company. I don't think it's going to go to zero. It's just expensive. That's it. But then again, premium company, premium stock price. That's the way it is. And then lastly, let me finish about Tesla. Of course, people get scared about Tesla. Lots of scare. That doesn't scare me. I often take the example of my roller coaster on Bitcoin. Or another example I use is Amazon. Amazon. How many peak to trough? How many 80% drawdown? I think Amazon went through something like 17 or 18. 80+% drawdown over a 20+ year period. So, we're not quite at 80% drawdown from like the 270s that it had a few months back, but we could be. And does that really matter? No, I don't think that matters at all. So I bought today. I was lucky. This is rare for me. If you follow the channel, there are stocks that I've paid quite a bit for. Like Enphase, I was buying when it was much more expensive, right? But I got lucky today. I got the lowest of the day. I actually got like 10 cents above 175 or something like that. Like super lucky on that price. I got super lucky, but I was buying more leaps, right? January 2026, 2 years from now. I'm very happy to buy these leaps for the right to buy 100 shares at 175. That's per contract, and the cost was something like 53. So 5,300 per contract is what the cost would be. To me, this is a steal. To me, the ability to buy this stock 2 years from now at 175. I believe this is going to play out very, very well. And if I'm wrong, that's okay. If I'm wrong, it's a write-off, right? It's a tax write-off if I'm wrong. But this is a bet that I'm making because it's all about position sizing for me. Position sizing is more important when you're entry level. This is, to me, going to be the largest company in the world, and I want to make sure that I own it. There's very simple ways to look at Tesla. Oftentimes a lot of the coverage of Tesla is very, very, very detailed, in the greatest detail. Tesla daily, it's daily videos on Tesla. It's a lot of detail. But for me, this stock, the way I look at it is very simple. If you look at the US, it's between 60 and 65% market share in the US. In Europe, a little less, but the only reason why in Europe it's less is because Tesla doesn't have a Model 2, it doesn't have a compact car. Compact cars are all the rage in Europe, and Model 3 in Europe still looks pretty big for Europe, right? When they have a Model 2, I have little doubt to me that they'll increase their market share perhaps towards 50%. But in the US, it's 60 to 65%. When you see an electric car in the US, it's Tesla. And so it's overwhelming when you live here because you see them everywhere. And if EVs are going to be a thing, Teslas will be the Apple of EVs. And of course, the average price of a car is, one order. One order. Not two orders, of course, but it's one order of magnitude of the price of a phone, of an expensive phone or an expensive headset, right? Like Apple Vision Pro. So one order of magnitude more expensive. If this stock is this leader, that means 20 years from now, could the stock be also one order of magnitude more expensive than Apple? I believe so. And of course, that's not what Elon's guided. Elon's guided for now, before 2030, Saudi Aramco and Apple combined, Tesla being bigger than that, that would be at these prices, at an enterprise value of 538 billion. This is, Tesla, a revolutionary company, is trading cheaper than JP Morgan. At 538 billion, this would be a 10x, 5 trillion, right? Roughly. And lastly, there's, I've covered Tesla a few times on the channel, but clearly my channel is not known for that, so I don't spend a lot of time covering it. But the story is simple for Tesla. You have tangible things today, tangible things worth paying for today. One of them is the cars, right? Mostly Model 3 and Model Y. We don't really care about S and X. The Cybertruck, the Semi, right? These are tangible products that are ramping. These two, Cybertruck and Semi, are ramping. That's tangible. So you have a car business. Then you have what I could call the electronic dealership and the repair network. But what's important to realize is that, Tesla is like the only company who doesn't have the legacy weight of a dealership network. It's like the only auto industry that doesn't have the legacy burden of having to deal with dealerships. That's a major tangible thing, major competitive advantage. They are their own gas station. They have a charger network. This is growing at an exponential pace. They have their insurance company, insuring in Texas and other places. They have energy storage, 2 million apiece. Leader, growing 100% year over year. They have energy trading, Tesla Energy. We know they make money with Tesla Energy and their energy trading. And if you look at STEM stock and where STEM stock is headed, you realize that they're winning that game. They're winning the game of energy trading. And they don't make much of money. They don't make a lot of money from their FSD software, which is their self-driving software. But there's no denying that they're the absolute leader in self-driving, and that has a present value today. There's a present value of future cash flows for that. And that should be reflected in the stock price, and it's not. So the tangible things today are all here. And to me, that alone supports the stock price. But as soon as you start dreaming about the future, and it's an informed dream, it's a dream based on analysis, you realize that, even if you assign a 0.1% probability of Optimus Bus, which by the way I believe is much higher, even if you assign that, the stock should be higher. Because the number, if you follow the studies, if you look at everybody doing their analysis, and I should do an analysis on my own about this as well. If you look at Optimus, it's stunning. It's absolutely stunning what could happen. This is a company that could revolutionize labor and launch another industrial revolution, right? And it's absolutely stunning in my view what's happening. And embedded AI, embodied AI, maybe a thing, and we'll have to see that. Tesla Home Energy. Solar, they're not doing too well, but we know their batteries are the leading batteries in solar, and if you follow solar, the next wave of adoption is a battery at your house to store energy for your house. And who's the leader in that? That's Tesla. That's not Enphase. I love Enphase very much, but the leader in home battery, the status symbol in home battery, is the Tesla Powerwall, and they own that, and that's going to be a tangible business line in the future. The robotaxi network, okay, that doesn't exist yet. We'll see if that ever exists. I happen to believe they probably should partner with Uber to do that, but we'll see when that happens. Anyways, there's something tomorrow that should have a present value today. And then you have Dojo and the computing business, computing as a service. That also is a long shot. But if this company was a startup, it would probably be a few $billion startup just for this, right? And that's not reflected in the stock price, in my view, at $538 billion, keeping in mind this is a company that's nearing $100 billion in revenue. So that's absolutely insane. I mean, in terms of revenue, they're about 4x less than Apple, but they will catch up really quick in my view. So I'm happy to buy this company. I think right now the stock is a steal. Will it go down more? I don't know. It probably will. I am pacing my buys up until April because I've got that sell up that house. So I have a little more money to deploy, etc. And then we'll see in April what happens and what happens with the rate cuts, right? Part of the reason why the stock is down, and a lot of tech stocks are down, is the rate cut may be postponed until May. I'm tempted to say this old quote, this too shall pass. It's like, yeah, this is extremely annoying. What Powell is doing is beyond annoying, but there will be a time where they will drop, and the longer they wait, the faster they will drop over interest rates. Over the long run, makes very little difference in my view. Happy to buy Tesla, happy to hold Palantir, happy to buy the NASDAQ. Now that Apple is back on track with growth, with I think this next generation of product, and I'm looking at a 10 years horizon. Anyways, this was not investment advice. This was not financial advice, just entertainment. I hope you were entertained. I appreciate your likes. I appreciate you subscribing to the channel. Thank you so much for watching, and have a wonderful day.